European stocks hit one-week highs as fears out of Portugal and Spain have no impact on markets yet. Futures up near prior highs ahead of Fed's FOMC statements. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you Morning Call Express. So, Scott, no one seems to mind the news that we're hearing about Spain and Portugal today. We are opening near prior highs, so how impressive is the news right now?
I think it's pretty impressive that, we got Greece out of the way. We didn't want to start hearing rumblings about Portugal or Spain, but we did, and the market's taking it in stride. And if you look at last week, the correction that we had, if you want to call it one, and the impressive snapback, I think yesterday's digestion was very, very constructive for the bulls.
Okay, so touching on that, because we did have an inside day yesterday with low volume, is it healthy after a setback?
Well, once you see a snapback and you're right back at old highs, you have to digest those gains. So if you look here at the chart, you will see the S&P. I'll show you exactly what happened here. If you go and you look at, here's that gradual trend we've been following, the low, higher low, all the way up, not even tested. This was what was broken. This was that momentum trend line. We broke, came into 1340, the 25% fib retracement, bounced right back. So yesterday everyone was complaining, oh my goodness, it was a slow day. There's no volume, there's no action. But you know what? To me, this was constructive because what did we do? We held higher. We held back above the 10-day moving average, which is very important. And now we're knocking on the door of that 1377 to 1378, which is that prior high. So if we get above this and close above this, if you're rolling up shorts based on last week's action, you're going to be in a lot of trouble.
All right, and of course we are ahead of the Fed's FOMC meeting today. If we don't close off after the Fed meeting, and we always talk about that key 1378 level, what would be the next level after that? You
actually have to roll out to the monthly chart. So if we go back to the chart of the S&P and you look at the monthly chart, you have to look at a point of reference right around here. So here is this small area. That would mean a successful takeout of this area, and that would negate the possibilities of a double top. And then the next level I see here is this is 1404 and this is 1440. This was actually my target for the year, and it does seem like if we get a little bit more excitement and things keep rolling along, that could happen before mid-year versus the end of the year.
Now, what could the Fed say to keep us from closing at those highs?
Well, typically people just like to sell off the Fed. So you're going to see that last-ditch effort for sellers to come in after they come out with their statements. They're not going to probably change their language, but they might say the economy is getting a bit better. They might allude to the fact that there's going to be no more QE. So you could see some sellers come in, but if the buyers absorb that the way they have, you're going to see a lot of people having to chase this market. So right now, very bullish on a constructive basis. We have leading sectors breaking out. You have the Qs already at highs. You have retail leading the way. There's a lot to like here if you're willing to look for it.
Let's dive into those a little bit. The groups that have been leading so much. I mean, we have Apple, new highs.
Yes, Apple has been very impressive. It's been leading the NASDAQ. If you want to take a quick look here, let's look at the Qs, which I'll show you, showing you relative strength. You look here on this is the monthly chart, and look where it's already above. There's no resistance to the left like I just showed you with the S&P. And if you look at the daily, it's been very impressive. Nice inside day above the highs. That is showing leadership. You want to talk Apple, you look right here. Apple closed at new highs. I'm long some. It's been a great trade. It's up another 4. Even stocks like an IBM still moving along, trying to get above highs here. The mega caps like a Microsoft still impressive, holding around here, ready for new highs. So you're seeing a lot of action in different types of stocks. So depending on what your time frame is and the speed you like to invest in, there's something for everyone right here.
Yeah, speaking of seeing action in lots of types of different stocks, let's talk the coffee stocks. It is early in the morning, so let's dive into those because we've been seeing a lot of action out of them lately.
This group has been great, and there's lots of different types of movement in this group. You have Starbucks that went to multi-year highs for an investor. You have Dunkin' Donuts that's been trading better that I think long-term you could own. Then you have like a laggard, like a JVA out of nowhere, just igniting for the active trader. Look at the chart here. Look at the way this ignited back 2 days ago, giving you some nice movement on even a laggard here. So you have leaders, you have IPOs, you have laggards. Again, if you just leave your opinions on the doorstep, the action itself is rewarding traders that have different strategies as they approach the market with a plan.
And speaking of those leaders and those laggards, we're going to dive into those a little bit more in the long version, so make sure to stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.